They are late to the game. They know they're late to the game. And so they're trying to get you out of your positions. And so, like I said, their cost base is between 10,000 and about 100,000. I would say maybe even 250,000 is their low cost basis. Because remember, they're thinking 30, 40 years from now as they transition. So they're going to sit there and just do this as much as possible so that they can get you up. Because if they treat themselves, if you look at how other Wall Street firms treat each other, they are ruthless. They do not care about each other. Yet they're going to go to the Hamptons and drink a couple of drinks and say, bro, you got me good on that. Right? But on the back end, dude, that's how they treat each other. Think how they're going to treat us.
Welcome back to Token Narratives with Bitcoin.com, where we discuss the biggest stories shaping the Bitcoin and cryptoverse. I'm Graham, repping the marketing function at Bitcoin.com. David is in Singapore for Token 2049 this week, so he won't be joining. But we've got Bitcoin.com CEO Corbin Fraser back in the house. Welcome back, sir.
Thank you. Yeah, fun to be here.
You had to miss last week due to one of those pesky my second kid is about to be born appointments.
Yeah, I was doing those hospital visits. I got to run to one right after this one too. So yeah, fun times.
Good stuff. We also have a very special guest this week, and that is Mr. Pedro Garcia from DYOR Media Network. Pedro is a technical analysis pro, and he bravely lays out his theses day after day on DYOR Live, which is one of several high-quality productions on the DYOR Media Network. Pedro delivers no moon boy analysis, meaning he's not afraid to tell us when it's time to be bearish. If you listen to a lot of markets-focused commentary in the crypto space like I do, that no moon boy mentality is a real breath of fresh air, given that, let's face it, the incentive is to deliver bullish forecasts regardless of the reality on the ground. So welcome to Token Narratives, Pedro. We are really excited to get your thoughts on the markets.
Thank you.
All right, let's get into it, gentlemen. Yep. Let's get into it because we've got a lot to discuss. The big news this week is obviously that the U.S. Federal Reserve has at long last embarked on its rate-cutting journey. Federal Reserve Chairman Jerome Powell emerged from his burrow, did not see his shadow, threw down a 50 basis, half a percentage point cut in the benchmark interest rate, then proceeded to make some cryptic statements that market participants and commentators like ourselves could interpret in wide-ranging ways. The crypto markets seem to react positively to the interest rate cut and accompanying body language of Oracle Powell, with Bitcoin spiking more than 4% to over 62K. We've also seen quite a few altcoins rise from the dead, outperforming Bitcoin for a change over the last week, including some majors like Celestia and Sui. So, Pedro, I'd love to get your thoughts on the markets. Was this rally driven by the 50-point rate cut? Are we in a new regime now, or is this just a continuation of the chop zone that we've been in since late March, and now we're just back in the middle or upper range of that zone? What are your thoughts, sir?
You know what? I'll put it like this. On my first time ever really going on my show with Tom asked me, hey, look, are we going up? We going down? What is it? I looked at him, I said, we ping-ponging. And it's like, wait, what? He's like, listen, just give it to me straight. Are we going up? Are we going down? And I said, we're ping-ponging. And you're like, you should be asking yourself, what does ping-ponging mean? I mean, we're in between certain junctions in the market that tell it to go down and to go up. Now, I know this sounds really weird, but you have multiple factors that are going on in the market. One, you have the election, right? And I know people are like, what does that have to do with the interest rate and everything like that? It has everything kind of to go what's going on, because the truth is, we don't know what's actually going to be happening in the future. If Kamala gets in, we don't know. Crypto is straight up like, we don't understand what's going with her policy and how she's seeing crypto. But in the back end, we know if Trump gets in office, like Bitcoin to the moon, right? So we're in this state where it's ping ponging. And so we're seeing it bounce off of the 200 period moving average. And additionally to that, we're also seeing it come back and find support on the 8 period moving average. And so you're just like, well, what does that mean? This means that this is when the market is playing this ping pong effect, institutions are having a blast and they're making a lot of money. And so, because they're pulling everybody's stops and also taking everybody's shorts, longs at the same end. And this is where me and Corbin were talking about when we met over at Futures Conference. So it's saying, we want to believe that this whole entire thing is set up because of from a fundamentalist level. And I'm going to bring up something that's going to be very interesting. And it's going to be, just for the lack of a better word, it doesn't seem right, but it's how the institutions work. And it's how they actually go through and they move through the market and how they move the market. And it's basically this real simple. The institutions need orders. And when orders are placed into the system, they will typically take the other side. So that means where the order's coming from. That's retail. And so do you remember back in the day when we saw the move with, this is back in 2009 with Kramer and the whole thing that came out? And he got in trouble and he basically said, hey, this is back in 2006 when he did this interview. And he basically said, hey, look, the market, we're going to want to push the market up and we're going to push the market down. And we're going to bring in retail traders and then we're going to fade them and hurt them. And then we're going to take their stops and then we're going to push it up. And then when they think it's time to go long, guess what they're going to do? We're going to then drop it down and take their stops and then push it up again. That's what we're seeing here. And I want to believe, and I used to believe that really like the chairman and what they want to do, want to like really do good for the economy. But if we look at the S&P 500, we can sit there and see they literally said they were going to drop the rate. And then what did we see for the day? This is bullish for the economy, right? Or we're dropping the rate. But if you look at the S&P 500, what did we see? We saw a sell-off for the day. Like what? Like we should have seen that explosion. That thing should have went boom, right? But why did it do it? Because they need orders. And it all comes down to literally, on a long-term sense, orders need to be placed. And I want to believe, and I used to believe, like it was all fundamental and certain things that moved and you have economic factors that go on. But the reality is it's ran by traders. And it's institutions that need to make money. That's it. It comes down to that.
When Pedro and I were jamming on this thing, we were man, he had me kind of in stitches because the way he laid it out was like, it was just a, casual conversation. Those conference chats were just like, hey, what do you think? What do you feel about the market? You feeling good? You feeling bullish, bearish? And then Pedro just lit me up like, you don't understand, man. Let me walk you through this. And then we started talking about the money printer and how this was just basically a game of hot potato. And he was explaining very eloquently how traditional finance and the Larry Finks of the world, they love Bitcoin. They love it because of what it provides them with in terms of like counter trades. Maybe Pedro, you can go off on a little bit more on that. That was enjoyable.
Yeah. So like I said, when I look at the market on a daily basis, right, I tell my viewers, like, look, this is what's happening. We're seeing buyers down in this lower level. We're pushing it up. They're about to sucker people in. And you can see a lot of that. And again, I talk a lot about this on my show, and I don't want to go in. Do you want to go in detail here, or what do you want me to do?
Let's go weird, man. Get as weird as you want, man.
All right, let's play. All right. So, Volek. Okay, so whenever the market's dropping, right, there's 4 sections in every candle. The reason why it's important is you have the bottom wick, you have the body, and you have the top wick. This is the structure of every single candle. And most people will sit there and say, dude, there's no way that like institutions play off of this. It's silly, right? No, this is actually how they play, because ultimately, when they're looking at the market, when they're pushing the market up, right, you'll see that they're putting in either seller wicks, that's the top wick, or the bottom wick, which is the demand wick, which people are buying. Seller wick, people are shorting. People buy it, institutions sell it off. People, sell it, and then they push the market back up. Now, on this back end, from a fundamental level, and this is where Jim Cramer talks about, right? Like, it doesn't really matter. It doesn't matter, because the reality is, at the end of the quarter, how do they need to come out? They need to make sure that their investors make money. And the reality is, they can go both sides of the market, and they do not care who they hurt. They want to make sure that they get more money coming into their investors so that they can actually play the market and keep making money and keep the fund wheel rolling, right? And this is their mentality. So when I'm looking at the market and I'm seeing the baby going up, right? But I'm seeing volume go down and taper down on the grain level, right? i.e. buyers. That basically means that the institutions, right, are not behind that push up. So when I'm seeing, as it moves up, green bodies, but bigger sell wicks, the top wick, guess who's pushing it down? Institutions. And then what happens? You have a nice little turn at the top when it hits, say, a 200 period moving average, like we saw today on Bitcoin, right? We saw it hit the 200 period moving average, and we saw, boop, and it started to come down, right? So these are the things you need to be mindful of. And this is how they play. And here's the thing. They do not care about us as it, for lack of a better word, we are their fodder. Right? We are literally the shaft in which they burn so that they can get into the market. We are the exit liquidity. So for me, when I look at the market, I gotta be paying attention, see how they're playing. And then I want to play along with them. That's really in a nutshell. And so when I'm seeing the market push up or the market pushing down, I'm looking at volume. Is it increasing as it's moving up, or is it decreasing as the market is moving up? Vice versa. If it's dropping down and I see volume dropping down with it, that means that movement is weakening, or they're getting ready to kind of go consolidate it, right, when it comes down here. So if I'm seeing, and this is the key, because when we look at the chart, we're going to sit there and see, as the market's going down, we see volume increasing. And so this is them playing around. So again,
what's happening right now, Pedro?
What's up?
What's happening right now, Pedro?
Well, every time it goes down, we see volume increasing, literally with the shorts.
Which means
they're putting in lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. We see this in all of the altcoins. We see this in everything. Yeah.
So I think one thing that I've been rereading Going Infinite. It's my second go through. So it's the Michael Lewis book about FTX, and I think the interesting thing there is that, when Sam Bankman-Fried and his ilk, his poly, what were they calling them, the polycule, when all these like Jane Street traders, the hedge funders, when they started moving into crypto, they didn't move into crypto because of, I don't know, our proclivity towards it's not like a libertarian fantasy of like, hey, we're going to stick it to the money. These guys saw an opportunity, and their opportunity was, this is an inefficient market that we can rape and pillage. And they took advantage of that. And of course, now they were just one of the early hedge funds to kind of move in and do that. Now others have moved in. And I think what was kind of enlightening for me when I was speaking to you is that, I think I have this, like, my default trading method is I'm just spot crypto. I like crypto. I hold Bitcoin. But in terms of like, say, my ability to beat the market, I'm being traded against by professionals that are probably egging me into buying more when they're probably taking the opportunity to sell into me. And whether I know it or not, I am often exit liquidity. I am also often, say, taking the counter trade to them when they're trying to just turn profit. They don't care about crypto. They're not spot long Bitcoin. They're not spot long ETH. They're not spot long Doge. They're just using these markets and the 24/7 trading opportunities to just rape, pillage, get their bag, dump on retail, egg retail in, and it turns into a bit of a money printer for them, where they don't really need to care about the asset. They don't need to care about the community. They don't need to care about like what we all believe in as crypto enthusiasts or Bitcoin bulls or whatever. They're just here to print money.
What is that? Is that all just short term though? Like in the long term, is that a different story?
I think long term, they are definitely bullish. I told Corbin, I said, you got to look at things like from a 20, 30 year period. Corbin, when we were talking as short term, they are definitely raping and pillaging 100%. They want to pull us out of our positions, because for us, if we see Bitcoin go to 300,000, majority of us are millionaires, right? We see Bitcoin go to even 500,000. We're like, game over, pull money out, boom, put that into fiat. I'm done. I'm buying a small little hut on an island and I'm okay. The way these guys play is they understand that from a global side, that the idea of blockchain, cryptocurrency, and actually how it works overall, they're seeing long term. They're seeing Bitcoin at 3, 4 million, 10 million, 15 million. And I know it sounds crazy, but when an infinite system is trying to fit into a finite system, it can only fit so much, right? We've been so, our current system is so bloated, right? With money flow and how it goes and how it's based off a debt system. They realize that it's, Jay Powell has a hard time already trying to figure out how he's going to sell the idea of a rate drop, even though he needs to raise the rate. And we already know that inflation is screaming up, but yet this thing doesn't work, right? It's like, how are you going to fix this? It's got to go to a new
Pedro.
system. So go ahead.
No, you go deep. Keep going deeper, because I think when we were jamming, you were talking modern monetary theory, and you were going down this path with me, and we were pulling out all the tinfoil hats of like, how does
this sounds crazy?
No, it does. It sounds insane to probably anyone kind of listening in. But if you go down the game theory of these guys, like you said, they have an infinite money printing machine. Now, what does that mean to normies listening in? What is the infinite system, and what is the finite system? Finite system being obviously Bitcoin, 21 million. But explain the infinite system to those who maybe don't understand how the money markets work.
All right. Long story short, our government has a treasury. It needs money. It sells options. Who does it sell options to? The public. But more importantly, who does it sell it to? The Fed. Right? What does the Fed do? Fed gives them money, gives them an interest rate. Instant money creation. Nobody had to go out there and work. You didn't have to go through and till the ground. You didn't have to go through and do a little drilling and pull out like real, raw, like natural stuff, right? Where you then create it and then you sell it, right? There are two primary industries. There's mining and there's service. That's it, right? And so in the same sense, that's how real productivity is actually measured. That system was done away with when the Federal Reserve and our government, and I apologize, I know it sounds kind of weird here. I almost sound like William Shatner because I keep hearing myself. And so I'm like, dude, so forgive me.
Doesn't sound weird.
Are you sure? I feel like I sound like William Shatner. So let me tell you something. All right, so you have this system here where money can be created, and it's far removed from the actual real system. And so when a government needs cash, and this is all over the Western world, and I am a Western man, I believe in capitalism, I believe in all that, but I also understand, and so do they, that this is going to get way out of whack. So what they're trying to do in the long-term sense is literally try to almost merge this, as much money as they can get from the infinite system, try to fit it in a finite system. What's a finite system? Meaning there's only so much of that. Whether it's like going to school, right? if you're trying to get a major, it's only a certain amount of knowledge you need to have before you can get that degree, right? It's finite. So in the same system, in crypto, Bitcoin, it's finite, right? There's only a certain amount of Bitcoin. What is it? Not 18 million, 21 million. What is it?
Minus lost coin. I mean, it's probably like 19, 18, whatever it is.
Yeah, whatever it be. Right, but it's that system right there. And it's only that much. So Larry Finksray says, even was a couple days ago, right? When he was on CNBC, where he literally says, Bitcoin is digital gold, right? And I used to think it was foo-foo money, but until I did my research and realized, holy moly, crapacholi, this is dope, right? And then from there, he goes in and now he changes his view. But what he's doing is he's looking for a 30-year term, 40-year term for not just him, but his family and his family's family. Because remember, it's all about posterity with them. And like, I'll put it like this. The Clintons, the Bushes, they're all American elitists. We know this, right? Like this is all part of like families, and it's cool. It's how we work in Rockefellers. And the reality is they need to figure out a way to be able to transition their income to be able to actually have it solidified. And so,
wait a minute, Pedro.
Yeah.
Are you saying that the Federal Reserve is not an independent institution that just has the mandate to
govern?
keep inflation in check and to keep the
Could you imagine if we
the
lived in a world like
unemployment?
that? Wouldn't that be so nice?
Here's the thing. Our way of living in the Western world would be crappy. In all reality, it's only because of debt that I get to go and poop in clean water and take a shower every day. I mean, look, I appreciate it. You know what I'm saying? If we look at El Salvador and many of the other places, right? Once they have a real system, right? They were able to kind of get out of the Western trap, right? I'm sorry, I talk with my hands a lot, and so I probably look like a creative. I'm like,
I
I'm
love
looking
it,
at
man.
myself like going,
More hands, more hands.
Yeah, give me more hands, more cowbell. Ding, ding. So, but in the same sense, we're seeing the system trying to transition into it, and I personally think that they're going to want to screw over crypto. And they're going to try to get at the majority of crypto, whether that is Bitcoin, Solana. They are late to the game. They know they're late to the game. And so they're trying to get you out of your positions. And so, like I said, their cost base is between 10,000 and about 100,000. I would say maybe even 250,000 is their low cost basis. Because remember, they're thinking 30, 40 years from now as they transition. So they're going to sit there and just do this as much as possible so that they can get you out. Because if they treat themselves, if you look at how other Wall Street firms treat each other, they are ruthless. They do not care about each other. Yet they're going to go to the Hamptons and drink a couple of drinks and say, bro, you got me good on that. Right? But on the back end, that's how they treat each other. Think how they're going to treat us. They don't care.
Yeah.
When I'm sorry, you get me preaching.
No. This is good. I think we have a habit of assuming that we're all in it together. We're crypto enthusiasts. But that is like, I think if you're thinking like that and you're looking at the charts, like the people that are buying with me believe in the same things I believe in, you are like, I think this is that wake up call everyone needs to hear, that you're being traded against by professionals who are here to try to encourage you to exit your position at the lowest price possible, because they're the ones trying to get in on crypto, like you said, because they're late. They know they're late. So what can they do? Like what are the tactics that these types of, say, I don't know, if you could call them like mercenary traders, whatever you want to call them, but they're just
called traders.
They're just normal traders. This is just, I guess,
this
is just normie trading. So what are the on the more institutional side, what are the things that, say, retail needs to be on the lookout to say, I don't buy it? Or like, what are the signals for a normie to say, that sounds like bullshit to me. That sounds like they're trying to shake me out of my position.
It's all visual. I'll show you right here. You mind if I share my screen?
Bring it up.
Do it.
Oh yeah. Let's get it on. All right. All right. So let's just bring this up here real quick. All right. I did this on my show. I think it was this week. I'm going to point this out. because this is really, really cool. And it's
Now, while you're
pretty
zooming in on
simple.
charts, maybe for those listening in on Twitter, we've got the video streaming on what do we got? LinkedIn, maybe on YouTube and Facebook, but we'll have the video posted as well shortly later. So, like, yeah, keep an eye out if you want to see some of the charts that Pedro's pulling up. He's given us a bit of a clinic here.
Yeah, just
We'll
real
also
quick.
do our best to describe what's happening here on the charts.
It's actually pretty simple. So I'm just going to give dates and times, and you can go look at volume. All right, so starting with current volume or current position right now, we're seeing crypto sitting at, give me a second. Our BTC right now is sitting at 53,000 plus. Okay, today we just hit the 200 period moving average. I gotta pull this off.
Your charts look a lot more complicated than mine, man. I
It's
just
I'm a little
look, is it a
complicated.
green day or a red day?
Yeah, the problem is when you're trading every day, you got to be able to understand what's actually happening. Now, I have a couple of friends of mine who trade ICT trading. That's a certain type of style of trading. I kind of play a little bit like that, but my trading is more based off of volume, zones, and then moving averages. So I use 4 primary moving averages that give me direction of trade and possible reverses. It's in a nutshell. But it looks complicated. But I'm going to try to make this as simple as possible. Do my best. Okay. As you can see right here, since September 6th, we had a sell-off. And I actually talked about this zone here back in August. I think it was August or right here, because I thought we were going to come down to it back in on the 15th of August. And then I was just saying we should come down to this area, but we did and went up a little, and we came back down. So we're starting at 6th of September, and you can see we had a huge volume of red for this day. And then we started the uptrend from on the 7th of September to right now. Now let's go ahead and point this out. You can see here the market went up. Now, in this movement, I would expect if the market is continuing here, that means more people need to buy, right? It's just common sense. And if it's going to continue up, you should see a higher amount of buyer volume than seller volume. Because seller volume means price going down. So the seller volume should mean that it should be less, right? Because people want to buy Bitcoin. We have all these ETFs, which is basically, horse dragging a Ferrari, right? We got 20 horses here. They can pull this Ferrari, even though the Ferrari can almost have 50, 60, 80,000 horses there. But we're not going to talk about that. So here's the part. Now, if you look down at the volume since the day of, you just got it. Right here, you notice that we have a descending amount of volume. Yet, we have an increase of price. Now, let's pull up the last leg that we went down. Here's the leg we went down. We started this leg. Let me pull this on the 26th of August. You can see here that as the market went down, right? We should see if the market was slowing down that the volume should be less, right? It means less volume, more sellers, less sellers. But look, shocking. Things
I'm a little
that
confused,
make you go,
Pedro. Can I interrupt for a sec?
please.
So, like, isn't volume just buys and sells combined?
Absolutely.
So, isn't that like not connected to whether the price is rising or falling? I mean, like, the price could be going up, and you could just have a lot of Bitcoin changing hands,
Agree.
right?
Mm.
Or vice versa. So could you explain
All the details.
you
I
mean, like
apologize.
why it should be? You're saying if the price is going down, the volume should be going down too.
If people, either it's net
If it's
positive or net negative, meaning you have more buyers than sellers or more sellers than buyers. So if a market is moving, yes, you have an equal amount of trades that meet each other. But on the back end, if there's an excess of buyers or sellers, right, that is basically the sentiment direction that the market typically wants to keep going. Now, yes, you have a meeting of volume, but here's the thing. When you're having, for example, I'm going to use this here real quick. So when you look at a wick, okay, the market opened up right here, right? So I'm using this daily candle right here. The market actually had to go up first, okay? There were sellers here. Then, there were buyers here as it was pushing it up, and then they sold off. Then it went down, and then we sold off. Or we sold off, and we bought back, okay? The next day, now you notice it's about equal wicks, right? But if you notice the next day, we close right here. We open right next to it. We go down first. Then we see the market scream up. As it screams up, those are buyers. But then we see a sell-off. These sell-offs are net sellers because people bought it and then the sellers took over and dropped it.
And maybe just to jump into the sellers, when you say sellers, it's indiscriminate of number of sellers. This could be one seller, depending on the market, right? I mean, obviously with Bitcoin, this is a major asset, but in a meme coin, shitcoin, that could be just a single person.
Absolutely. Yeah. And so in that same sense, when you're seeing the sellers come in and I'm looking at volume and I'm seeing more supply wicks or seller wicks, to me, it's communicating that sellers, shorters, or people who are selling the market are offloading and or establishing shorts. So all of a sudden, as we're coming in, you're meeting buy, sell, buy, sell, buy, sell, buy, sell. But then the sellers or shorters have their positions established because they're still short. It's still in there. Just like you have buys down in here, right? Well, as it's moving up, the institutions are establishing their shorts or their longs as they are meeting. So if I buy a position right here at 53,600 and I hold on to it, and all of a sudden I'm out at the 200 period day moving average here, this is communicating to me that they just got out. So yes, it is price meeting itself, where every time you have a buyer, you have a seller. But when does that buyer get out? And when does that seller go out? And if me as a novice guy is sitting there and I'm going, oh, the prices keep going. So I keep buying. And
And you're
who's on the
buying
other
the top.
side?
Yeah.
I'm sorry, go ahead.
I mean, like this is where the classic scenario of, retail comes in, buys the top because they're buying the hype. They're saying, holy shit, the market is ripping. It just ripped 10%. Well, it's got to rip another 10% because it just ripped 10%. So there's this bias of the history of the last day or the last week. And you get people that are, maybe more amateurish, or they're new to crypto, or they're new to trading, or they're unaware that there's sharks in the water and they're the chum.
Yeah. If you can't spot the novice in this trade in the direction here, then you're the person. If you can't spot the mark,
it's me.
You're the mark.
So I can't spot it. So just to double back one more time. So you're saying that if the price is rising and the volume is dropping, that means probably we're going to see a reversal. Yeah.
Pretty much. And what you want to do?
And if the price is dropping while the volume is rising, we're also going to see a reversal. But That's what you're saying, right? Now, my question is, what if the price is rising and the volume is rising? Does that mean it's like that
That's a good thing.
game on?
It's game on. And so
Okay.
over the last, 6 months, 8 months, right? How long have we been in this consolidation? About
It
right.
feels like forever, man. It feels like forever.
March. It was funny because here's the other thing, and I hate to bring this up, and I'm not gonna, on all my stuff that I talk about, it's all on my show, and the reason I bring that up is because I'm gonna talk about a couple things here now that is it's wrong. It's absolutely wrong. I don't know if I should bring it up. It could get us like in trouble here with X and everything like that.
Oh, I like that. I like that.
Huh?
I like that.
Okay.
Let's
All
go.
right. But I'm gonna get a bunch of hate. But you can go back and check it on my my channel here. So back in October 7th, that weekend, the market was heavy. And that weekend I said, you know what? I expect some type of news, some type of war to break out, something like this to happen, you know. And again, I hate that the outcome that we saw that weekend was what we saw. But the market sold off and it dropped, hit a buy area, and then we saw it go up. But because you had this equilibrium of people they needed buyers, and it kept trying to go up, kept trying to go up. But this is the other part I need to say. Anytime the market is moving up, you need sellers for the buyers to buy. Okay, so if the market is moving up and there's not enough sellers coming into the buyers because the institutions need the sellers to kick in so they can push, they have to create sellers. So a lot of times you'll see some market unrest. And Kramer talks about this. He literally talks about this and how he calls his friends over at CNN or CNBC or ABC. And it doesn't cost a lot of money, a couple $1 million. But, what I'm saying, you're going to make a ton of money. Even though it's against the law, everybody does it. Don't worry about it. It's literally what he says, and unquote. It's literally what he says. So back in October, and this breaks my heart for all the Jewish people and the war that happened that we've seen ensuing. But you can see, I think it was here. Yeah, here we go. You can see this area here. Again, this is not cool. So back in October 7th, right here. So this was in this area here. Market was feeling weak. It was trying to go up, and we were having issues to go up. So what did we see? So over this weekend, I talk about, hey guys, look, expect some news to come out, something that happened to really make the market kind of sell off. And sure enough, we see it. We popped up. Right, here's the 7th. It was October 7th, right? That happened?
Yeah.
And then boom, you see the drop up, all the sellers step in, and then what do we see? Huge explosion. We remember back in the day when you had World War III almost popping up, the market would sell off and we'd almost be in a depression. Why didn't we see it? Same thing happened with the S&P 500.
So how much, I guess, you and I were talking a little bit about this at the conference in Toronto, that blockchain futurist. We were talking a little bit about Jamie Dimon and kind of how these
families, these people.
Yeah, these families, these KOLs, whatever you want to call them. They're like the talking heads, the institutional talking heads, how they may be saying things on the news and coming on to the CNBC, shop talk, we're talking trading here, and they're saying one thing, but they're doing another. And again, retail is not aware that they're being manipulated. They're being played, and not only by these individuals and the institutions, but even by the media conglomerates themselves that allow this. They're in cahoots, man.
Yeah, it really is, and it's sad. So we can talk about it like this. Let's just use, because I don't want to get killed if ever this goes public, and I'm just saying I'm not going to I feel great. And I want to live a long time. I'm saying this publicly.
Oh, you mean you're not suicidal?
I won't even say the word. You know what I'm saying? Because I just think I'm he's got the heebie-jeebies. I'm good, all right? I'm life is good for me. I'll put it like this. Mr. The Omaha, Orca of Omaha, him and Charlie Munger, they are perma bears on crypto. They've said they are perma bears, right? They've said that they don't agree with it, that it's all funny money and it's blah blah
Rat
blah
poison.
blah 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 blah. But on the back end, they bought, and you can go look this stuff up. I'm not gonna give certain names, but go look up and see if Berkshire Hathaway bought a potential bank in Brazil, one of the largest banks out there, where they were getting into Bitcoin and they were going to establish everything through cryptocurrency. And he could have potentially bought during that same time maybe, I'm not too sure. You can go look it up. If they bought a gaming company out there that was saying that they're going to start issuing Bitcoin instead of in-game currency and start to build everything on crypto. But publicly, Bitcoin bad, Orange Man bad. How does that work? Like, how does that work? Like, this is what I'm saying. And I'm not going to talk about Jamie Dimon because Jamie, at least he finally came out and said, after he was talking trash, and like, oh, crypto's bad, Bitcoin's bad. And his daughter calls him up and says, hey, knucklehead, I have 2 Bitcoin right now. What are you doing? And he said that publicly.
And maybe I'm at a level of spurginess now where I just don't trust anything. So even when these guys do flip, which they naturally will, because like you said, there is this finite supply of Bitcoin. They know they came in late. They want more Bitcoin. And now when they finally are coming out to say, you know what, I'm really bullish on Bitcoin. I'm going to go on CNBC and Kramer and, talk to these talking heads and tell them how great Bitcoin is. Why would they be doing that? Well, because they maybe in my head, they maybe have excess supply and they're looking to sell some. But they want retail. They want exit liquidity. They want you normies to come in and say, hey, you know what? The bank said Bitcoin's great. I think I'm going to start buying. And they're like, yeah, please do. Because I got a bag. I got to unload. I need a new yacht. I got to fill up my tank.
It's exactly. And, go ahead.
Yeah. Stay right there if you don't mind. So I was a little confused by what you were trying to say there. So around October 7th, you're saying that the powers that be wanted crypto to pump there at that point, Bitcoin to pump.
They needed it.
So that's why.
Sellers.
So that's why they like. Okay, so that's why they. That's why there was suddenly a war.
Well, okay. Well, here's where I guess I'll fill in the blanks because I'm 100% not suicidal. Please, Mossad, don't kill me. But this is just what if I was a hypothetical conspiracy hat wearing dude, I'd be like,
listen, you told me to put on the.
Why'd they let him in? It's not like Israel's the most guarded state. Like, why'd they let him in?
Dude,
well,
they're the most. I have friends of mine who are literally Jewish guys. Like, they served in the idea, right? And I have friends of mine who are on both ends. Like, legit. I have Arab friends. Because traders, the only thing we care about is green, right? That's just it. It doesn't matter. I mean, whether you're even Islamic people whether you're Shia, Sunni, or Sufi, Shia maybe not so much, but Sunni and Sufi, very much about making cash, right? And so, maybe I should say that too.
Well, leaving aside whether it was orchestrated, I think what's interesting here as well. Okay, so this supports the theory that Bitcoin and crypto, but especially Bitcoin, I guess, is a risky asset or an asset that you purchase when there's uncertainty in the world, when shit's hitting the fan, right? And so this would seem to support that. War's happening. Sure enough, the price of Bitcoin goes up. COVID craziness happens. Sure enough, the price of Bitcoin goes up. I guess that's one way to look at it. Whether or not it was like orchestrated by the Illuminati.
I wouldn't say the Illuminati. I don't know if I believe in that. I wouldn't call it Illuminati or like the 9 families or 13 families or whatever they are, right? I just think the way the system is built, you need exit liquidity as well as liquidity to push your position up. And the majority of those families are in banking, or the majority of those powers are either controlled by banking or they are positioned in a way where they can be manipulated by the banking. You know what I'm saying? Like, I
Yeah.
don't think it's the Illuminati. I don't think it's like that. I just think it's more
Yeah, I've
like
just
you
used
need
that as
extra
a
liquidity.
shorthand.
Yeah,
Shorthand for
crazy.
yeah.
So
But
I
really,
guess
it works. That's the problem. Like, is it self-fulfilling prophecy? It might be. But the reality is when it hits that 100-day period moving average, why does the 100-day period moving average work? Why does the 200-day period moving average work?
was it
I
because
mean, in
others are
a
watching it,
market that's
or is it
efficient.
because
I'm sorry, go ahead.
is it because others are watching it and it becomes self-fulfilling, or is it because
Before we even
this is
had
the natural?
computers, and I can go back. I mean, let's go back into the S&P 500. Let's go back to 1900. It still worked, right? Like, if people are just watching it, then it shouldn't work. Oh,
So
somebody has
he's
20
zooming
years.
into a chart in ancient historic times with
Well, I've gone back and I
monocles.
looked at
We're
it
in
in the
monocle. We're in the
1920s.
monocle era.
Right. But we still tracked Bitcoin. I'm not Bitcoin, excuse me. S&P 500. We still tracked many of those things that were actually moving. You look at a stock right now, I refuse. I am a cheap man. I refuse to pay for anything that's overpriced or if it's a good deal. The reason why I say that, this is really important, is because many of these people, when it comes to buying things in the market, they don't ever pay retail, and they're not going to pay too high for something, and they will always buy at a low area, and they're always going to sell at a high area. So in that same sense, they're not going to go through and like keep buying it. Remember, we're talking about exit liquidity. So they're going to wait till it hit a down area, or an area that would be potentially what we call a low point, right? At a discount if you're a value investor. So if it's at a discount, well, many times it's at these levels. Or if you're at an extreme high level, right? You can see it you can play these things, you can play these moving averages, these whatever you want to play, but they all happen at the same time.
So
And so I
Pedro,
feel like
okay, if folks listening in, I mean, I'd say the majority of us are not day trading S&P, crypto. I'd say probably the large majority of buyers, at least in the retail space, are just kind of spot buyers. They might be a spot seller when the market rips. They might make a swap or two per month and kind of like move in and out of an asset or two, but they're not trading daily candles or hourly candles for the most part. I mean, there's for sure a lot of traders that are, but I think for most people in Bitcoin, they just kind of come in as like casual participants. What kind of advice do you have for those casual participants to avoid becoming exit liquidity? Is it that they need to watch the charts, or is it that they just need to be aware of the games that are being played against them?
I think both. And if you don't want to be the exit liquidator, or liquidity, excuse me, you need to play the game. Don't hit the player. You know what I'm saying? Because you're going to get played no matter what. And they're going to purposely draw in a God candle to get you to buy in because it's psychological. Because you have fear of missing out, right? I remember I was in a community lounge on Telegram. And this is when Bitcoin had just hit the 200-day period moving average, sitting right here. And I'm bringing this up for a certain reason, because we can see something similar here as we're seeing right here currently in the market. We came up, we hit this area, and there was a zone. And as this started selling off, I'm sitting in there and I'm telling everybody, hey, look, be prepared for it to hit 15,000, 10,000. And so this was back when it was at 32,000. And somebody's like, how can you be so positive it's going to hit it? And I go, because there's buyers right here where we saw it just explode. And so this down here at the 10,000, and then I had mine over at the 15,000 as well. And so this is where the initial point where you saw the explosion. And there are leftover buyers that want to buy that. They want to buy that. Okay. And so what they'll do is they will buy, they'll short, and then we'll make money at a point where it goes down. And then it starts to push up. And they wait for it to hit these lower levels so they can pick up more. So I'm saying, if you're going to go through and you want to buy, when everybody's afraid, when you hear your grandma going, oh, were you in Bitcoin? Oh no. This is when you want to buy. If all your friends, yeah, that was dumb to get in crypto, you're an idiot. Buy.
So this is good to hear, because this does prove my thesis of I only buy when I feel like I'm being extremely retarded. Like for me, it's like if I'm looking around and I'm like, this is probably the stupidest period to buy. That's when I'm like, deploy some gunpowder. This is max stupid. This is the stupidest decision I could possibly be doing right at this instant. But it feels like that's probably max pain. Like this might be a max pain moment where, nobody else wants to touch it. It's toxic waste.
Yeah.
And, I'm maybe getting a deal, getting it on sale.
Absolutely.
Looking at that 200, that moving average, in the zone we're at right now, it looks like we might be rolling over and just going like that's it. We've already hit the peak, right?
For this leg.
Yeah.
Look, I'm pointing out right here. Look. Okay, we had our high. This was that 73,000, right? Everybody's like, we're going to the moon. Side note, I went on a space. Oh, who's the guy? Zach Humphreys. Which he was help running it with this other guy who's turned out to be like a crazy dude. But Zach Humphreys helped running it. And so I was telling everybody, like, hey, be ready. This was back in March. We're going down. And all these guys were sitting there like, so you don't know what you're talking about. We're going to the moon. We're going to 100,000. I said, no, we're kind of heavy here. We're seeing an increase in volume, but now we're seeing a really good increase of like sellers here. And that's really important here. Like, look at the sellers. There's an exhaustion candle here, and now we're seeing a turnaround. And they started making fun of me. And I said, all right, well, and they're like, I said, you know what? I'll come back in about 2 months, 2 or 3 months, and we'll see if I'm right. And they're like, you ain't gonna come. You don't know what you're talking about. And this is on Spaces. I'm like, no joke. And so it's recorded. It's there. And so, dude, I was like, I'm always kidding, dude. So I come back. I think it was like 3 months later. So I think that was in March, April, May. I think it was in May at this mark. Because I had talked about like this is where I was looking for the market to play off of this area. Actually, let me change that out.
So
and go ahead, brother.
While you're zooming in, the at least on Twitter and X, it does seem like there's an extreme amount of bull sentiment. Maybe because of these rate cuts. Based on your visibility of sentiment versus your visibility of the existing volume and the moving day averages, where are we headed?
Good question. All right, so let's point into that. Let's get into the nitty gritty here. All right. Now, I hope I'm wrong here. I really do. Again, because I want my bags to get filled. I was talking about it today on the show. Like, I was like, I want it. I really do. Because who doesn't want to be a billionaire, right? And then, if I look forward to the day where I can stake that money here in the United States. Because I'm a huge proponent for the U.S. I'm a proud American. So I'm going to bring this up here real quick. You can see we have high, lower high, lower high, lower high, low, lower low, lower low, higher low, See this right here? If this went higher than this and this, I would be much more, I bet to say we're moving higher. But the volume and the movement of the market isn't telling me that. So we're hitting the 200-day period moving average. I'm expecting us to see it come at least down to that 50,000 area. Okay, the next leg down. If not even further, will we see go to the 48 or 46? And then from there, this is going to be November. We'll see. Or let's say Trump really starts to get going. And what we saw in New York was insanity. Like, I actually called a friend of mine and I said, bro, is it really like that? He goes, dude, there's so many Trump people. It's crazy. He's like, they are like fanatical. And a lot of them are coming out from New York. And New York has been predominantly a blue state. But I mean, there's been times where it's been red. And so when I'm looking at that, I was still going, if it literally turns, I mean, red, dude, we could stop right here. We could. Okay. But if it doesn't.
So you're saying October, November, we might be near Pico bottom for this cycle, and then where are we going? Is Valhalla the moon, or
Dude,
where are we going? Where are we going from there?
I think we can get to 200, 300,000. I do. The cycle.
Bold.
If we go,
bold.
Dude. Yeah. Uh-huh.
Trump, baby.
By
Let's do it.
End of next year. That's the
Yeah,
plan.
I think so. Yeah, we should. We could see it probably up in this level, if not at this level right here. I'm being conservative when I say 150, 200,000.
Now, if that 40 zone there doesn't hold, are we going back to 20?
I didn't say it. Some people don't want to hear it. I think we potentially could go to maybe even, yeah. Yeah.
7?
Yeah, my gut says that if we
See what he
can't
said?
hold that, there's going to be exhaustion in crypto, you know. And then I mean, like, think of the potential macros that need to occur for that to happen. Like, probably Trump didn't score the bag. He didn't win. All right, wars. I don't know. I guess based on your vibe, is Kamala
let's
plus
be a little
wars
bit
good for crypto?
We could see it hit 20,000. I think going back to the 20,000 and playing here, we could. 15,000, you know, we could have been, and potentially, I mean, this is a long shot, right? Like, I'm talking, this is Hail Mary, right? Like, this would be my dream in a sense, right? So you kind of go down to like 10,000. But, and with me, man, I'd be saved up going like, money, right? And I think the institutions would love it to go down that far so they could just funnel so much money into it. But I don't think crypto people, I mean, even Michael Saylor would be like 20,000 again. Dude, I'm all in. You know, he's selling off stocks.
Yeah,
But
I think that's
you
the
know what
that's
I'm
the
saying. Like,
that's
we're
the funny thing is
talking
that it seems like
20,000. I think you'd be in like all
there's
the way.
like this isn't just like banking bros that are taking these opportunities. It's also there's sort of like a new class of like high net worth individuals that are also participating and
Yeah.
you know, the CEOs of like the micro strategies and the micro strategy lights
Yes.
and the, you know, the diet micro strategies. Like there's been this company in Japan that's kind of doing the micro strategy the strategy of micro strategy with just basically trying to get as much Bitcoin as they possibly can. That's their goal. And now people are trading their stonk because of their positions.
Yeah. And I think you're right. I think that safe, right, is like that 20,000. That 20,000 right in this level here is one of the things. Now, are the people on X, are they watching? Can they see the video?
No.
Oh, they can't. Oh, shoot, I forgot. Yeah. All right. So I think you just said that. All right. So we have the 400-day period moving average sitting around that 60,000, or excuse me, not 60,000, 50,000 area. I think I mean, and I'm being realistic here, right? I think this level potentially is where we could see the higher low, which is right here. You see that 400-day peer moving average right here, this red line? So I think we could come back down to hit this. This would be the lower high. And then we could then see it move up. Let me give you right there. Right, like in all reality. But in relationship to what we could see potentially, like I said, much lower levels. And I think it's possible if if Trump doesn't look like he's going to get in office and we start to see Kamala really start to pull ahead in the polls, yeah, I think we very much could see the end of this cycle here and then drop. I don't see Trump backing away for 2028, right? I mean, he's so, stubborn. Him, I don't know, he might bring in Kennedy. Who knows, right? In 2028. But if he doesn't get elected, I think we're going lower. I think we're very much going lower. But this drop here is potentially either the local low we could see, and then base, and then pop, right? And then potentially that 200, 300,000. But if it doesn't, this thing's gonna just like that right there. Everything be sad.
Total chaos, man. Total chaos.
Pause.
So
But
okay,
either
so
way,
maybe
go ahead, brother.
I was just gonna ask, like, for folks listening in that need to learn a little bit more about, say, reading charts. Where does a noob get started to better arm themselves with sufficient knowledge in both the tooling, but also, say, the strategy, and looking for those opportunities or those red flags of, this is a danger zone, baby? Where do you suggest people to get their start?
I think right now there are a lot of good. Like when I first got into trading, there was anything good. I mean, you literally had to pay for it to get it. But right now online, I like ICT trading. He's a style trading. I think it's like Smart Money Trading. You can check him out. He's on YouTube. He's placed all his stuff on Facebook and also I think on X. But also, if you're really, and I would love for you to actually learn from the guy who taught me, but he's no longer teaching, and he doesn't, like, he actually got pissed off with me because I keep mentioning his name, and also he gets all these crazy, like, crypto people like, teach me how to trade. I want to learn like Pedro, and then they kind of get screwed over, or not screwed over, but he's just like, dude, this is nuts because we're a pretty fanatical group. But I like ICT trading. You can go through and check them out. You can also come and I do this every day on my show. I do with DYOR Media Network. You can check us out on YouTube. I go over everything here. I talk about it not necessarily in detail, but I do talk about it kind of like, okay, guys, all right, we're at the local top here. I'm expecting us to kind of start seeing it come down. And then we see it. You could also yourself go through and just pick an indicator. Start there and just start looking at price. Okay, and seeing where it comes down. And then from there, create some form of trending, moving average, Bollinger Bands, something that you can find a trend, some form of a reversal, okay? And then in addition to that, some form of a pullback. So you want a trending, reversal, pullback indicators, and just start every day looking at the markets. If you want to just basically kind of see the turns of the markets and stuff like that just by yourself, anytime that you think, oh no, everything's falling apart, that's always a good gauge. But we could see some people, it's a good time to buy.
I love it, man.
So DYOR Media Network on YouTube. You're out there every
on
day.
YouTube.
Could you tell us for a minute about this new show you've got,
Oh, yeah.
which is about the swamp in DC?
Yeah.
What's going on there?
All right. So DYOR Media Network, we're trying to build like a CNN, CNBC, but for real information, right? Talking about real stuff, no moon boys crap, right? Like this is the way it is. It's how we're seeing the world. And we have a lot of smart people. So one of the things that we've been talking about, and we've been talking about with Chris Alexander, it is called Crypto Swamp Creatures. You can find them on YouTube. I really like them because it's basically these guys who are like in DC. You know, it's like we see the guys on, C-SPAN, and we kind of see them yelling at each other, right? But there's a lot of underground, like what's called undercurrent stuff that are actually happening that nobody knows about. And these guys talk about that and narrative sense. And they're really funny. I mean, one thing I like about them is that they're very smart and it's really funny. And so they they have a dry sense of humor. So it's pretty cool. And so what they do is they take C-SPAN and they tell you the story behind it. So you actually know what's going on. So I tell people this is one of our new shows that we're doing over at the DYOR Media Network. We also do our show every single day. It's a live show. We interact with all of our people. If you're new, you're old, everybody gets pretty much some type of jingle and we get to know you and we have a good time. So, yeah. Well, the other part behind it is as we keep growing, we want to bring in a network where it's real stuff, like where you can come to and you have left, right, central views where people are talking about it. And the daily show is a good way for you to kind of see how things are really working, right? And so we try to do that. So our actually show is called DYOR Live. You want to go pull that up. My co-host here is almost yelling at me, literally in capital. So he's mad at me. So yeah, it's called DYOR Live. So you were right when you pulled it up. So that's in a nutshell.
Yeah, good stuff. So check it out. Check out Pedro's stuff. DYOR Live.
It stands for Do Your Own Research, boys.
Yeah.
Also, keep in mind that we're either going to 300 or 20. So we're going to get you back on the show, Pedro, in a few months.
Yeah, give us a few months. You come back and you can kind of call it for us if we made the right plays or not. I'm
ping pong.
Yeah, ping pong's cool, man. It's a fun game.
Yeah.
Let's have some fun.
Definitely.
All right.
Yeah. So
thank you so much.
Media Network. Oh wait, actually, he just sent it to me. Our website is DYORnetwork.media, and just so you know, me and him are a personality, so you can actually hire us as well. So if you ever wanted to do stuff, we can actually come on and have fun and keep people entertained.
Nice.
That's hype, man.
Yeah.
Awesome.
Well, I was entertained.
I'm very entertained. I love seeing guys like you walk me through the charts like this because I mean I try to avoid looking at them. I just it's one of those things that just gives me anxiety. I've got most of my wealth in crypto, and it's just I'd rather just be focused on building than looking at the charts. But it is the reality is if you're holding crypto, it's not stupid to be keeping an eye on them.
Yeah. We
if
love
you can
money.
get in at a low level, definitely. And that's what that's really harp on my guys about that. Like, look, get in at this lower level. One last thing. I had one guy hit me up privately. We have a Telegram that you can talk to us and communicate with us.
Mm-hmm.
So he hits me up, and it was a crap coin. Actually, excuse me, it was Baby Doge when it went live on Binance. And so I said, guys, hey, look, we have this weak zone here, but expect it to hit the zone, sell off, and then start seeing it push through it. Guy hits me up in the middle of the night. And so I pop, I'm like, what's up? And his name is actually Jesus Christ, Lord and Savior. The Lord and
Yeah.
Savior. It's, you know,
Go Jesus.
like we have fun. It's really fun. And so he hits me up. And I said, what's going on? He goes, I'm going to buy. And I'm like, do not buy. Wait for the sell off and then buy. And he's like, I'm going to buy. I was like, dude, like, you know, like the
You can't help
mindset.
everyone, man. Sometimes you
Yeah.
sometimes you can't
Yeah.
save Jesus.
Oh, yeah.
Cool,
Man, you got to
man.
come on our show, dude. You guys, I love to
Yeah,
have
yeah,
you
yeah.
guys. It'd be fun.
We'll swing by. That'd be fun. It'd be cool.
Definitely.
Let us know when you guys are heading to the next conference too. We'd maybe there's an opportunity there too.
Absolutely, dude.
Cool,
Absolutely.
guys.
All
Sorry,
right.
guys. I got to run
Let's
to the
wrap it
hospital.
up.
I got
Oh,
a
yeah.
baby to
Okay.
go check in on.
Good luck.
All right, later, guys.
Later, guys.
Thanks.
Later.
Okay, see everyone.
Peace.